Hi there. I had to cut the initial video into two as there was too much for anyone to grasp in one go. I hope the smaller chunks will make it easier to comprehend. As people have different levels of experience, though this video deals mostly with the fundamentals that underlay the use of trade credits and the concept applied to real estate. With the following video after this, there is the nitty-gritty. So if you're already familiar with trade credits, just bear with us, watch this video and then proceed to the next one. What are trade credits? Trade credits are a new type of currency. There's various forms. They've been used by President Obama when he's been purchasing a meal, and they've been accepted by Donald Trump as a deposit from a tenant moving into the World Trade Center. Trade credits are actually a new type of currency. They were developed by the World Trade Organization. It's been estimated that 400,000 businesses in North America actively use organised trade and barter networks to supplement their cash transactions. Why? Because trading is smart business. More than 2/3 of the Fortune 500 companies participate in trade relationships. Given the opportunity to get your next real estate purchase either by paying cash or by trading for your company's products and services, which would you choose? This is an article that was in the Wall Street Journal. It dates back a bit, September 14, 2011, but it's reporting on Donald Trump's acceptance of trade credits using gold. The tenant was APMEX, the gold exchange. The ultimate tool for doing no money down. That's what trade credits is. You can get 100% financing, but it does not mean that you use all trade credit for the purchase. You would use a combination of finance. You'd take the normal first mortgage. In some cases, you may need to be doing hard money loans, but in most instances, this should no longer be necessary, as trade credits actually improve the ability to borrow funds from any lender. It means instead of you flipping properties for peanuts, you can become an investor. You can buy and you can hold properties. You can become a real estate landlord and collect a stream of rent. But that's not what we recommend. What we recommend is that you go for large capital sums. To fully understand the concept of trade credits, it's necessary to understand a lot of interrelated things. Do not expect to grasp everything immediately. There are things you may never have heard of before, other things you may have heard of but have no experience working with them or in that area, and even with knowledge and experience of everything, you definitely will not have the particular formulation and manner in which the trade credits approach to real estate all fits together. So some background reading and study is necessary. It's not a matter of you're just going to pick it up because you're so smart. It's not the case. The financial objective is to cash out with capital rather than income streams. Some people want to learn everything before they proceed. They're procrastinators or anal retentive, whatever you might call them. If you have infinite time, maybe you can discover the secrets of the universe. In which case, call me in 30 years when you have a good understanding, and I shall show you how to piece everything together. Note, you will still need to practice and obtain several years' experience using the tools before you can become a master. But grasshopper, I do not live forever. If you seriously want to make money and be successful in the shortest period of time, the approach is put the key in, turn it, and start the engine. Yes, study, practice, gain experience, but the best way to make money is to actually start. I do not profess to be a real estate guru. I shun that title. But I do have an extensive background in property in a number of fields. As a developer, as an investor, as a flipper, as a licensed real estate agent, as a government urban and regional planner, as a lawyer, as an economist, and quite a few other things which I won't go on to mention. I have multiple degrees, including a master's in town planning. I have degrees in law and in economics, and I have postgraduate qualifications in law, finance, investments, real estate. Now, I don't just hold a whole bunch of academic qualifications. I also have professional experience in each of these fields that probably few, if any, real estate gurus have. Now, I admire the talents of some gurus in finding buyers and sellers and negotiating deals. However, one thing that I've noticed that's absent, financial aspects of real estate, tax, and the structuring of real estate deals.
After all, I pioneered the trade credit concept, which the gurus have basically not even been aware of.
Having slight technical difficulties here, the machine is a bit slow. Apologies for that. Contrary to what the gurus say, I do not hold real estate long term. Having a business as distinct from passive assets is my approach. So, contrary to what the gurus say, I believe there is more value and optimal profits if you have an early sale of a property, in which case you take the profit out and reinvest it and you compound your returns, rather than holding property long term and just going for the rental stream. Rental stream seems to be advocated by a lot of people, but they're missing out on the concept of compounding. When people buy a home, they end up burying money. The money which they put down into the purchase just sits there in their house and lot, not working for them. Whether you borrow money, whether you borrow money for your house purchase or you pay cash, the property is going to appreciate at the same rate. It matters not whether you put down 100% money or 1% money. So why not, with the same money, buy 2 or 3 or more properties that will all appreciate? The homeowner who only buys their house cannot make a profit when they sell It does not matter how much the home goes up in value, because the house next door will go up by the same amount of value. So if they want to stay in the neighbourhood, they sell their home, they have to purchase elsewhere, and it's going to cost them roughly the same amount as what they got when they sold their home. Many real estate investors get locked in to the wrong approach of buy and hold and leaving their equity in the property. If you drag out your capital through equity loan, you have leverage. The worst way to buy real estate is simply cash. Now, I've had this thing about rents. Rents provide income and they're assessable, as that means they're taxed. But if you use the rental stream to pay interest on an investment loan, you can convert the rental stream of assessable income into capital gain. Now, if the capital gain is in your home, the first $500,000 for a married couple is tax-free every 2 years. What could be better than that? Now, I have seen Robert Kiyosaki do some incredibly astute deals flipping, yet he is one of the gurus that still advocates rental income streams. Wall Street knows that rents are a stream of income, and it's the capital value of a property that is a multiple of the income received from rents. So turning income streams into capital is the objective of Wall Streeters. So why shouldn't that be the same objective as yourself? In the past, I had 2 clients actually sell their homes to become renters and recapture all of the equity that they built up in their homes. They then geared against their capital 3 times. So instead of having only 100,000 of investments, they had 400,000. The investments they each made were in real estate investment trusts. They are property trusts. At the time, the compound growth for those investments was 15% per annum. This allowed their investments to double in a matter of 5 years. I had them cash out at that stage, which was just prior to the severe market downturn in June 1990. They were able to repay Citibank the money they borrowed, which was the $300,000, and they were then sitting there with $500,000 each. That is still achievable today, facilitated by the use of trade credits, even if you have no credit and no money. So instead of looking at buying and holding, grab your capital, leverage against it, use any rental income to service the interest, and concentrate on making capital gain, which is also tax advantage. Now, to understand the concept, there are a lot of elements, starting with economics. This is basic supply and demand, how markets work, monetary theory, policy and practice. There's also inflation, the causes, effects, and the uses of inflation. Inflation can actually be a positive if you know how to benefit from it. You need to understand investing in all markets, especially real estate, and you need to know about town planning, zoning, ordinances, and rezoning. It's possible to take a property that may be zoned residential and convert it to become commercial. Without any development on the property, you can actually make considerable profit. You need to understand what contract law is about. You need to understand things like assignments and consideration. consideration is actually when two parties agree on a deal, each party has to provide something for the other in return as part of the exchange. Without consideration, there is in fact no contract. You also need to get a grip on things like assignment, which for wholesalers seems to raise its ugly head quite often. Then there is the actual process of purchasing a property and the provision of finance. And the Dodd-Frank Act has come in to make things a bit more difficult if you're providing finance. So there's a whole set of rules that go in with the process. Another problem that investors face is seasoning. So it basically means if you buy a property at a low discounted price, you can't automatically the next day turn around and refinance at market value. Not terribly many real estate investors are concerned with financial planning. Financial planning should be the basis of you creating wealth, and you should get a grip on that. In terms of the trade credits concept, we apply concepts from corporate finance. It's not that you need to become a corporate finance wizard, but you need to understand about the issuing of shares and the raising of capital. Also, tax is an important element. When you're buying a property and looking for consumers or purchasers and sellers, you need to do your market research and then prepare your marketing plan. Marketing is not just a matter of going out there and advertising, flooding the streets with pamphlets. It's having a strategic approach for the 4 Ps. And if you don't know what the 4 Ps are, you look it up for homework. You also need to gain some experience and skills in negotiation for both with the seller and also with the buyers. And an important thing that I found very useful was actually having buyers lined up before you purchase a property. It makes it easy and they're able to slip straight in and settle the deal directly with the seller rather than you having to take title and then shift it. You need to understand the difference too between simple interest and compound interest. Again, research that, do it for homework. There's other strategies that you'll have to embrace in finding buyers once you've acquired a property. These can be things like wrap mortgages, they can be rent to own, and they can be lease options. There is in fact a distinction between rent to own and lease options. The rent to own concept is basically selling a property to a tenant, and lease options will come in there. But lease options can also be sold to investors who are not tenants. They're merely taking the options and making money on the buying and selling of those. Another slide, $1 worth of trade credits available for allocation to real estate dealers. If you
we recommend. If you want $1 million of free capital, you've got to show me a business plan. It may be one that you have already, or it could be one that you prepare. And if you don't know how to go about it, well, you go and purchase it. Now, trade credits are not a magic bullet. What trade credits are is like a super fuel additive that can help real estate investors do more deals and make more money per deal. However, if you try using it to power an old jalopy with an inexperienced driver, don't expect
the same performance as a Formula One vehicle with someone like Mario Andretti as the driver. And if you don't know who he is in fact the world's greatest racing car driver. However, a warning, even the best racing car drivers have been known to crash and burn, so it's not a matter of just diving in using trade credits without getting your training and learning. Now, I never do rehabs. I prefer nice homes in nice areas. They're easier to rent and they're easier to sell. Investors prefer nice homes that they can rent and resell at market value where you don't discount. That means, in fact, that your profit is the difference between what you purchase at and what the market is offering. Trade credits are full real estate, and by using them you can get all the money that you need. That concludes the introduction. Now look at the background video which provides an overview on how trade credits actually work. And following that, if you can decide that you would like to participate as a business partner, watch the video on the business development program.